Hey guys, it's Max. How's everyone doing? Good morning. Just looking at my stats from yesterday. Only 375 people watched my video with Mike Venuto. I was hoping it would at least get 500. You know, my videos with Jay get 1,000, but Jay has a bigger name than Mike. Anyway, if you haven't seen it yet, go watch it. I talked with him for about an hour yesterday. I talked with him the day before yesterday for a little bit. We talked a couple of days. We covered a lot of ground. I didn't record the conversation from 2 days ago. We had like a pre-interview. All right. Well, but he's an interesting dude, and I hope he'll come back on the show in the future. He's kind of the missing link, or I don't know. He's kind of the behind the scenes thing that puts a lot of this together. A lot of this industry together. I think they sponsor a title. They sponsor like 183 funds. So he's in charge. Jay's just a small part of his thing. Now, granted, I guess a big part because they brought a lot of assets under management in with YieldMax and Defiance and the other Jay related projects. But he has a lot of projects that are totally un-Jay related. All right. Well, let's check out the Alti verse. All right, so here we have Alti up 37 bips, or Alti up 22 bips, the average constituent in their universe up 37. So it's kind of early in the morning. I recorded a video last night, but I haven't uploaded it yet about Alti and about their callers and if their callers saved them yesterday. Because I was talking in comments to one of my commenters, and anyway, I need to reshoot that video today, or maybe I should just do it on this video. I guess I'll do it on a separate video. Anyway, okay, well, there's the Alti grid. There's the Alti grid. The only thing new, look, Jay's not afraid of controversy. The only thing new in the portfolio is United Healthcare. So Jay loves that volatility. But anyway, they have callers on and everything. Now let's check out the index buffer report. Kind of my favorite little thing. These index ones are badass. I mean, look at XDTE killing it this morning, up 82 bips. But look, SPY-T's not far behind, 67 bips. And look at iSpy doing really well at 72 bips. T-Spy doing really well also. I never did have ULTY on this month, and I think they paid a dividend. Maybe I'll just do that next month. But I like talking to him. He had some interesting he has some good macro views on the market. But basically, he was bullish, and, a month later, what's it look like? Yeah, it was right decision to be bullish. The market's been straight up in the past month. We're going to look at Max's volatility metric here in a second. What the hell is this? I don't think volatility is really at 56. I think that's a bad print. We'll look at volatility in a second. For sure. All right, let's see what's going on in NASDAQ land. Look at that, YMAX. I love YMAX. It's in my own portfolio, and it's also in my family's portfolio that I manage for them. It's also my kids' portfolio that I manage for them. Clip is looking nice today. China's bouncing. Maxi's looking nice. It didn't look nice yesterday, though, but Maxi, for those of you who don't know, is just leveraged exposure to Bitcoin futures, pretty much. There's a little bit more to it than that, but basically, Bitcoin's up 50%. Maxi, in a year, Maxi should be up 75%. Look at USOY. Oil's bouncing this morning. USOY is the Defiance oil-based fund. Now, oil's been bouncing lately. Let's go check out USO. Well, on the daily chart, it's not really much of a bounce, is it? We're also going to look at the charts of the market here when we get through the buffer reports. The only thing that's getting killed is bonds. And after the Fed announcement yesterday, and it sent bonds crazy. Let's look at TLT. I wish Jay still had TRES. I mean, but let's just look at TLT. TRES traded from the long volatility side of bond futures, and bond volatility has been epic lately. Let's overlay a little bond volatility on here. Okay, well, here's bond volatility. Actually, bond volatility has actually been low compared to right around the election. Bond volatility has actually been coming down. So TLT is based on a 20-year government bond. The 20-year government bond has been getting killed lately. The 60-40 bond portfolio, 60% stocks, 40% government bonds. Look at this. This is a proxy for government bonds at the long end. It went from 140 to 70. It lost half its value in a year. And that's, during 2022, whenever interest rates started going up. I was talking to Mike Venuto yesterday, and you've heard me mention before a fund called Riser. Riser actually profits off interest rates going up. So, but it's a fixed income fund that also pays a fixed income. So during 2022, if you held government bonds, you lost half your value. If you held Riser, you made about the same dividend or interest or yield or whatever you want to look at off as you did off government bonds, probably a little bit more off Riser, but 4, 5, 6%, something like that. But you got NAV appreciation and you got total return growth. And even as interest rates have started to come down, Riser is still going up. Riser should be an important part of anyone's portfolio, not financial advice, but Riser is something else. I've had some content on it before, and I need to make some more content on it. But it is something else. All right, so but the TLT being down so much got me thinking about Riser. Riser is what TRES could have been. Anyway, I'll talk with Mike and Jay more about that some other time. I know you guys don't want to hear about TRES. Let's look at the single stock buffer report. AIYY getting murdered and everything else is up, which is great. I love to see it. And I love to see Coney up. And I love to see AMZ up since they're in the portfolio. And I love to see AMD up and NVDY up. All right, so that's good to see too. Let's look at my, see what else we have to look at. Here's my, I'll call it my model portfolio. This portfolio that I've managed for my family of high yield funds. Just put the new Dorsey Wright fund in there yesterday, FEAT. It's up 1.3% from last night's close. I mean, this could just be a dead cat bounce. We're going to talk about the market in a second. But anyway, I was glad to see these up. With the addition of FEAT, which is a fund of funds, I have some duplication in the rest of the portfolio. I'm gonna knock some of these off down here because I put Coney and NVDY in there in the family's portfolio just to get some exposure to that part of the economy or whatever. Well, as long as those stocks are doing well, they'll be in feet. Feet keeps the 5 hottest performing on a momentum basis yield max stocks in the universe at any one time. So I'll probably knock NVDY and Coney out of here. I'll make content on it and tell you guys about it. I'm also going to knock Triple QY out of there. I'm not knock the 3 of those out of there. That would raise 30%. Then I'm going to buy 20% inverse, which is Y triple Q. And then maybe 10 more percent Alti or 10 more percent feet. Anyway, I'll make some content on it. Tell me what you guys are doing. And this isn't the only money that my family, my family has professional money managers too. Don't worry. But the whole fate of my family's future doesn't rely on me getting these freaking high yield funds right. But I think this is a decent allocation. And with those adjustments that I was talking about, I think it looks pretty good going into next year. So, all right. All right. So there's that. What else can we look at? Okay. Well, on the video last night, I'll just do the video last night now. Did the callers save Alti's ass? Okay, I was talking in the comments with I think it's Living on High Yield, but I had said before, and I stand by this, but I had said before, if the market drops 5% in a day, Alti will drop 10%. And I stand by the let me give you my reasoning to that. Alti is about twice as volatile as the NASDAQ. So that's where I got the 5 to 10. Okay. That's mathematically it's so. Now, Alti does have callers on, but I think a lot of people put too much faith in the callers on. The callers don't make it where you can't lose money. The callers just make it where you can't like lose 50% or something, which is important because I think that's all that happened during the first of the year. I think they had a couple of these that literally lost 30, 40, 50%. They got stuck bag holding them. But the callers, when I check, the callers are anywhere between 6, 7, 8, 9, 10%. And sometimes more, depending on how volatile the stock is. So like, let me give you an example. Let's do this. Let's look at yesterday's positions in Alti. I've already thrown them away, but we'll look at today's. Gosh darn it. Yeah, I should have. The video last night was better because I looked at yesterday's positions and I looked at TNA is actually what it was. And the caller was about 7% away. Let's see what these callers are protecting today. So today, well, you can kind of tell. Last night's close in TNA was 42. The caller's 45. So they've already violated the caller. They're underneath the caller. But okay, so here's the example. I'll recreate the example for you. We're going to look at TNA because they haven't switched. That's the same caller they had on yesterday. And then we're going to build we'll build that position. TNA is triple leverage small stocks. And I forgot what it was. They had a short at 51 and then they bought a put or 45 or something. Yeah. 51 and 45, I think were let me see when that expires. TNA 51 expires on the 27th. It was the 51 and 45. Okay, this will be a good example. Let's see. Okay, 51, 45. All right, we don't have the fill prices in there, but the fill prices don't matter really. For the sake of just the mechanics. TNA's price, triple leverage NASDAQ price before the big drop, or not NASDAQ, triple leveraged Russell. I guess we can take the bond board. I'm going to throw this one away. We don't need that. Okay. So it was trading at 48. And then yesterday dropped to 42. Okay. So the market was right here where I'm going to put this line, right here, 48. Now, if this puts them in a position where they had a, just like always they do these trades, they had a cushion. The market could have dropped like 8 on this for like 6% before they start losing money, but it did. It dropped, but they had a cushion. And then they also have a floor. They can't lose any under 45. Well, sure enough, the market dropped from 48 to 42 yesterday. Under 45, they're locked out. My point was, and I'm not trying to be unnecessarily gloomy, but my point was these callers, well, for instance, this one, what is it? It's set 15% away, 48 to, okay, no, so 3 points on, no, set 6, it was set 6% away. Okay. So it doesn't mean you can't lose. It just can't, it means you can't lose more than 6% in yesterday's case. But I still stand by what I say that for one thing, the NASDAQ only dropped 3% yesterday. It didn't drop 5%. If it would have dropped 5%, I think Alti would have been down more. But I will say this, the callers are a little bit closer than I thought. So maybe not 10%, but it depends. There's no guarantee. But I think if the market drops 5% in one day, maybe Alti won't drop twice as much, but it could drop 6% on this one. And I ran a few numbers on some other ones last night at 7 or 8% on some. So I'm going to say that if the market drops 5% in one day, Alti it'll hit all their callers. And so it depends on where the callers are. But let's just say, assume everything is like this one, where it's at 6%. And it isn't. But if that was, then that would limit the one-day drop, to 6%. So sometimes what you got to watch out for is a big 3-day drop like we had in August. Well, here's the real genius of these callers. If we had the 3-day drop, or maybe right now is a dead cat bounce and we start dropping again and we drop into tomorrow and into next week. Okay, well, let's say this ends up going to 35 or something. Well, how much did it save us then? It saved us 10 points, compared to the old scheme. This doesn't expire until the 27th. So this protection is still working for us. Now, also at some point they'll roll down, reestablish a new position. But no, this is fun. This is why YieldMax is doing so much better than it was before. YieldMax and Alti, but all of these stocks are where he switched the strategy in different ways from Alti to YieldMax, but they both have the same effect of theoretically less downside and more upside. And that's what the covered call spreads do. They give you theoretically more upside. The Alti gives you theoretically, well, they're doing so much stuff on Alti, but callers give you theoretically less downside. So, it's a great time to be an investor. But if this was just a one-day drop, the Alti's callers really, they helped or whatever. But where they're really going to come into handy is in a situation like where we get a 2020 type drop where the market's down 20 or 30%, and he has these callers on. So, but just on the one-day drop, it's not going to. My only point was just on the one-day drop, it's not going to make Alti immune from dropping all the way to the callers, which is maybe 10% was unnecessarily gloomy, but say 7%. I mean, there's no protection for the first, 7%, but then after that, it's really awesome. So, all right. So that was my video from yesterday. It was a lot better last night, but it's whatever. All right. So let's look at the market and the volatility metric. So, for a few days we've been talking about why Vivix is going up, and I keep saying, what do these guys know that we don't know? Not today's bar, but it was sloping up at a 45-degree angle even before the big blow up yesterday. We were thinking something might be or I was wondering it might be up. So it switched when it started happening. It switched our volatility system to cautious. SPY was at 604. The volatility system hasn't been working great. Well, finally started working. Now the SPY's at 590, and I mean, and for me, I would just stay cautious. We'll stay cautious, and we'll look for people to start taking off hedges. Now, there's three measures I use volatility: VIX futures, VIX cash, and VIX volatility of volatility. Well, this one right here, futures, is the fastest to react, but when the shorter time frames of futures start selling, when they start selling VIX futures, that'll be an indication maybe that the dip is over, and then the market will start rallying again. But for right now, I mean, VIX futures went all the way up in one day from 16 to 20, but closed at 20. And since then has pulled back to like 18, but now kind of bouncing. We're at 19. So we'll see. We'll see. Let's look at VIX of VIX, which is VIVIX. I think that's a bad bar. I don't really think it's down that much. I don't really think it hit 59. It's saying giving an opening price at 59, but I'm going to say that's a bad print. And then we just have the plain old VIX cash index, which is straight sideways. So we'll see. So I think for now, discretion's the better part of valor, which you see lots of times. And what we saw in August, which you see lots of times in market pullbacks, and what we saw in August is, let me try to get it there first. Yes. Okay. Same thing was going along in August as was now. We were at all-time highs. We gapped up, we're trending up, and then we kind of peter out. And then right there on this day, there's a gigantic gap, and then and then it starts going down. Okay. Well, and the market went down there for 1 day, 2 days. It went straight down for 2 days, basically. But then on the third day, it bounced back to the center Bollinger Band. Well, lots of times that's sometimes a good place to get a short. When the market starts going one way, it'll go big for a couple of days, but then it'll retrace. But the first retracement's the most likely one to be the fake out. So let's see, using the same theory now, if we can. Boy, they're saying this market's high. I mean, gosh darn it, I just moved something I didn't mean to. We're using the same theory now. We're nowhere close to bouncing enough to get back to the center Bollinger Band. So anyway, we'll just keep an eye on it. But for right now, definitely caution, I think, is the play. These two red lines right here are the gap from the election night. Okay. This was the bullish gap after Trump got elected. Well, gaps, the theory is gaps are bullish as long as they hold. I mean, an up gap is bullish as long as it holds. Well, there's a couple times the market got back inside the gap and tested it, but there was buyers there this time. We'll see if there's buyers there this time. If there's no buyers and they slice right through this and close underneath this, that'll be an indication the market's weaker than we think. If the market screws around, goes sideways all day, dips into here, and then bounces back out, then the bulls are that lets us know the bulls are still in charge. So what happens if the bears win the battle of this gap? If they get it on the other side of this gap? Okay, well, if that happens, then likely the gap will turn into resistance. And you would look for the next gap down below, the next structure they might be trying to fill. That right there is 53.78. So we'll turn on the SPY and see where it is. Okay, there it is. All right. So on the SPY, it's 536. So if we get loose under this area, if this gap fails, and it would make this kind of look like a top. If this gap fails, they shoot through this. Then the play is definitely from the short side. Then if we get a retracement back up into this from underneath, that's a put, and you would buy, and you could structure some type of trade aiming for this 530, 535 area. If we get underneath that, there's open gap down around 500. So it ought to be interesting to see what happens into the end of the year. I think the theme of this next year is going to be proceed with caution, or discretion's the better part of valor, something. All right. Well, I think we checked on everything we need to check on. So let's see if the market's bouncing, or see what's going on with the market. Pretty much straight sideways from yesterday. Well, or actually up from the close, but straight sideways from the 5,900 level. Looks like it's kind of found some equilibrium for now at 5,900. We'll see what happens if it gets into this gap again. Are there buyers there? If it gets into this gap, is that a place you want to get calls for next week for all-time record highs? Or is this gap going to fail, and do we need to aim for something down at the 53.60 level? All right, guys, I appreciate y'all for being here. You have a great day.